Okay, cool. You've made it to week 2, and this week is all about investing. And before we dive in, I just want to briefly go back to last week where I mentioned that there is a difference between trading and investing. And you may end up being more of an investor with some trading skills, or you may, do it the other way around and end up more of a trader with some investing skills. It's entirely up to you. It's a free game. Um, the remarks I made are not to scare anyone. I just want to give a realistic view of what it is like to go in each of these directions. And again, I mentioned, okay, this program is called Trading Digital and Financial Assets. And I mentioned one of the reasons why that is, but also another reason why trading is so cool and so awesome is that it is a gateway to getting to know yourself. I will dive into that more in week 4 and 5, where we talk about trading psychology, for example. But just know that, if I scared you last by closing off last session, don't be afraid. Like the trading aspect is going to provide insane value also for the investor. And as I said, it's a very good way of getting to know yourself. So especially like short-term activity, buying and selling, trying to, see how the market works, etc., is going to help you become a better investor. So with that said, I just wanted to, keep all the traders on board as well. And yeah, the two just really go hand in hand. And if you master both, or if you become really good at both, you just become like a very good market participant, and you will be able to outperform the S&P. You will be able to outperform the majority of market participants, and that's kind of like where we want to get you to, on this journey. Okay, cool. Enough said. Let's go to week number 2, investing. So we'll come back to trading at a later stage, and obviously we'll be doing the trading competition. So we need to give you guys the skills to actually trade. But for now, let's start with investing. As I said, personally for me, my portfolio performance, the vast majority of that, the success of that came from investing, and preferably early stage investing, where you have the ability to invest in something and spot an opportunity where others may not yet see that. So this was true, again, to repeat, for example, 2016, 2017 blockchain. And it has been true for the people that recognize the AI boom that is sort of currently going on early, right? Where like a stock, like the whole stock market is sort of still in a negative sentiment, but there is this AI stock. Well, it's not an AI stock, but they do a lot with AI. Nvidia, it absolutely skyrocketed, right? So if you are in a position where you recognize those opportunities, obviously if you switch your portfolio in such a way that you own more Nvidia than, Beyond Meat, for example, which has been a terribly performing stock, then you are sort of, outperforming the benchmark, or at least the likelihood increases that you do so. Okay, anyway, so those are some perspectives. Where are we now? Week number 2, investing, and this chapter is called Investing Basics, so why invest? So I mentioned that a little bit already, but it is good to every now and then repeat a few things. So I've actually made a few slides before the slides get too empty and I don't need them at all anymore. I do want to keep the slides in, as teachers do, or lecturers. Let me say lecturer. I don't like to call myself a teacher. So reasons to invest. First of all, the growth of your capital. And I'm going to just drop some hard truths that are going on, or that are just truths right now. We are in an environment where we are dealing with high inflation. And basically we have two metrics. If we have high inflation, it simply means that the purchasing power of our currency, of our money that we actually hold, is decreasing over time. We want to kind of combat that. Now, the harsh truth and the sad state of affairs right now is that we generally will not achieve this by work alone. Because if you look at the inflation right now, the salaries that we get simply do not increase as fast as inflation is increasing, or at least it doesn't increase to a level as high as inflation. It means that if inflation is like 6, 7, 8% per year, at the very minimum, your salaries also should increase by that amount in order to sort of keep that same purchasing power, right? I hope that is clear. Generally, this doesn't happen. It's very unlikely that, or at least in the regular positions, the regular worker, the worker out there doesn't get this consecutive increase on a year-to-year basis. Generally, that's just simply not true, and that's why inflation can be a problem. And it is so at the moment. I don't know if you guys notice it, but every time I go to the supermarket, I get less and less product for my euro, and that's just really annoying. You just see your purchasing power, going down the drain. So you're able to buy less house, you buy less car, you buy less coffee, you buy less, supermarket stuff. It's just devaluing. So that is already one reason to get in our chairs, digest and devour all this content, and actually try to take our finances into our own hands, where we put our capital to work rather than just relying on our jobs. And I'm really sorry that this is the way it apparently currently is. I wish we had some kind of a different system, but for now we need to sort of be aware of the system. Or I also don't like the word system, by the way. I think that's it always scary, like the system. I don't think such a thing exists. It's just see it as like, this is where we are now. What am I going to do about it? That's it. You don't need to label anything. Anyway, I'm digesting. I'm what is that? I'm diversing, whatever you want to call it. So yeah, that is the state of affairs right now. And one way to sort of combat that is to put your money to work, to actually start investing. Now, what do we do when we invest? It's going back to last week a little bit. The reason why your capital should grow when you invest, or at least when you invest properly, is that you invest in companies, preferably early stage. Like the earlier stage you are, the more potential growth there is in the future. Just think about, for example, a company that supplies its product to the entire planet. Like, how much growth is still left? But if you had that same company 20 years ago, and I'm thinking of Amazon again in the back of my mind as a good example. They don't supply products to the whole planet, at least not yet. But they are pretty close to providing products to a large part of the population, relatively large part of the population. How much growth is there still left? And how much growth was there 20 years ago when they were still a small company? Or I don't even know if it was 20 years ago. At the beginning, yes, it was actually. Or late 90s, mid 90s, I think. So it's like, depending on where you are investing for the reason that a company sees potential future growth. At least, that's how you can put your capital to work. Those are the basics of investing. You see a company that is tackling some challenge somewhere, or it builds a product that everybody desires. You see an opportunity for the business to grow. You give them some of your money. In return, hopefully you get some shares, which give you the right to actually, you become a co-owner of the company, and you can actually voice your preferences if you own enough stocks, that is. And in that way, if the company grows and they keep on supplying more products or services to like a larger and larger piece of the population of this planet, then the company is going to increase in value, your stocks are going to increase in value, and that way your money grows, right? So this is very different from doing nothing. I hope that is clear, that if you just depend on salary and saving, you have this inflation metric, circling above your head. That is just something of an annoyance, to be honest. Besides that, this is one strategy to actually think about your own retirement, rather than putting it in or having it being put in, a retirement fund or that sort of stuff. It's still, it works, it's good, but as soon as inflation starts to pick up, those numbers that you get there may not be good enough, and it may be a good idea to take, things into your own hands, at least to a degree. We'll talk about diversification of strategies a little bit later on, but I just wanted to get that point across. So the screenshot is from Investopedia. Investing is an effective way to have your money work for you and build wealth. One of the side effects of that is that, of course, like if you do this periodically, like say, 5 or 10% of your salary each month, that money keeps on working for you also while you're sleeping, right? Now, a small side note is that there is no guarantee that stock markets are always going to go up. They have been doing so. It's always been a good idea to invest. But I would like you to get to a point where you question this. Like, is that still going to be true in the next 5 years? And where is the S&P still going to grow? Or is the AEX or whatever index you're looking at? Or, what is going to be true in the next 5 to 10 to 15 years? Like, hopefully we can get to a point where we question these things and we start to make solid investment decisions based on the information that we have right now. So reasons to invest, a few more. This is from one of the sources, I'll get back to that in a second, but the real actual purchasing power with 3% inflation, and inflation currently is double that, probably even more. And if we talk about it, the inflation, how that is measured, I can also have some comments on that not everything is actually included in that number, and inflation, the real inflation, as we notice it in the day by day, is probably higher than the number, the CPI, the consumer price inflation, probably higher than that number, but that's a different discussion altogether. Anyway, the statistics here is that if you start at year 0 with $50,000, in year 10, you will have lost 26% of your purchasing power, right? It's just, with doing nothing, with just keeping the money in your possession, that is your outlook with 3% inflation. And then after 20 years, you basically lost 45% of your purchasing power. I don't think I can give a clearer example of why we should, at the very least, be paying some attention to our own finances and see if we can put it to work. This is besides starting your own business, which could make way more money than investing potentially. But for the sake of for where we are right now with this course, investing, this is, I think, very clearly one of the reasons why. Compounding. You need to understand how compounding works. That if you have a starting amount of capital, and let's say you make a return of 5% every year, the larger that amount gets, the higher, or the nominal amount is going to be when you make another 5% return, right? So at the beginning you will make let's say in this case your principal, let's say you start with $100 and you make 5% a year. The first year you have $105, but then the second year you make 5% on $105. Of course, that 5%, the second time you make 5%, the nominal value, the nominal euros that you actually make on your principal, your starting capital for that year, is going to be higher than the first year. If you extrapolate that into the future for 30 years, which is what compounding is all about, then you will see that this stuff grows exponentially. That's enough said about compounding, I would say. It's in the source, but you need to understand how this works. That if you consecutively make 5 to 10% a year on your capital, you will be shocked at the amounts that you will have in 30, 40, 50 years' time. And this is how the billionaire investors become billionaires, right? They keep on compounding, stay invested, and over time, 5% on $1 billion is all of a sudden, way more than obviously you started with. Okay, I think that's enough said. So some sources. Let me flip my stuff. I told you we will be introducing you to some people that are great thinkers. One of them is Bill Eckman. I think he's a billionaire. Yeah, he's a billionaire. And he's had some masterful trades over the years. And this is just about the very basics about finance and investing. What it's like to invest in a lemonade stand in this example. Why it makes sense to invest, how it makes sense for the investor, but how it also makes sense for the person owning a business. So just to get the whole entire thing complete, this is an excellent video. Yes, it is 10 years old, but it's just a great example. It's timeless, so it doesn't matter if it's 11 years old, if it's timeless, right? Okay, another great one. Ray Dalio, also a billionaire, also an extremely successful investor, and the whole world listens when he has something to say about the economy or about the prospects for investing, etc. This is a super interesting video about how the economic machine works. So again, we're looking at money, we're looking at the financial system, and we're also looking at economics. We are trying to get the whole picture complete here. Wonderful video. Also 9 years old, 36 million views. It is timeless. It's a great one. And I would love to have some discussions about this in either the lectures or the Discord, by the way. As this person said, I wish they taught me this in college. Okay, next up. We've also included a Harvard professor, because why not? And this is just a good perspective on how to and why to work with your money, how to do it wisely, but also your own career prospects, why you should be looking at your finances, and how to start actually playing the game, and what to look out for. Great conversation, not that long. We really love this format, so we've included this. Some basics. Again, so here's where I got the screenshots from. The goal of investing is to grow your money over time. I think with just these reasons, it's already clear enough. Like, hey, at the very least, I should be paying attention, and I hope that you will be paying attention. I'm sure you will. Then we have the advanced source. I mean, again, it's not mandatory, and as you can see, it's 3 hours and 35 minutes and 35 seconds long. But Naval Ravikant is one of the greatest thinkers of our time, in my personal opinion, and I know many people agree with me. I think he has 1 million followers on Twitter right now. He is the founder of AngelList, which is basically a place where angel investors meet people seeking capital. And yeah, he's just a well-known figure in the world of investing, has done extremely well for himself. I don't know the net worth or anything, but he approaches the game from, for example, angel investing. So very, very early stage investing, when a person still walking around with an idea and is looking for like $100,000 or something to get started. That's where folks like him come in. We have other people. Peter Thiel, for example, is a great example. And you will get to know all these people. So I think I mentioned this in the beginning. We are going to introduce you to people that are just the greatest thinkers. And hopefully in that sort of indirect way, we provide value so that you get to know these people and you can start to understand how they think, and why not, copy at least part of their behavior and their thinking. But of course, in the end, we want to think for ourselves. So it is advanced, and it's about, it says, how to get rich, but it's very much about like the work ethic, why you shouldn't, sell your time cheaply, why you should have your money work for you also when you're sleeping, etc. Right? It's just, and it goes all the way back to that basically the sad situation is that if we only work and save, the chances are that inflation is really going to have a nasty effect on our balance. Okay, that's it for the sources. I think I'm still on schedule to keep this video a bit shorter than the ones before. Some personal perspective. Again, I think I closed with that last time as well. So for me, investing and trading go hand in hand. The majority of the returns have come from investing, and preferably as early stage as possible, right? So that's why later we also have like VC investing. We highlighted that because those guys really, that's where like the 10, 20, 50, 100, 1000 X returns generally tend to be. But it's a different game than trading, and it's one that should be mastered completely on its own. We just want to make you aware of that exists, and that people are, playing this game with great success. I will probably have more perspectives and more experiences to share. I think for now, this serves as a good introduction for this week. The sources are going to get more and more interesting, I would say, and we shape this framework for you guys and go deeper and deeper into the world of investing and trading. I hope you're still excited as I am. See you in the next video, and good luck.